Hello everyone, I am Anil from Anil Dudani Ventures and want to share a video that how your funds can really go for double earnings. I have put the sequence and I will just briefly explain and you can put in place and it can really give you good returns. And this is the strategy in the current market most of the traders for the futures and options are utilizing because of the good systems and processes put in place by the NSE, SEBI, and the other government agencies. So I will just run it through very quickly. So I suggest that you can open the trading account with Zerodha, which is the good platform in India, and it has got a good compliance and governance. So the funds are quite safe, and at the same time, the platform is very user friendly. I would also suggest that the process for NRIs also is very easy. They can convert into INR and they can utilize the funds from the NRO account and can start trading on the trading account. And at a later stage, when they are done with the trading, they can always convert back to the NRI funds with a small process. Once you have done the Zerodha account, which is a very small and very simple process, you go and buy the funds which are basically very liquid, such as Bharat bonds, liquid Bs, and HDFC liquid funds. Once you buy these, you can see these on the platform of Zerodha as your securities. After that, you can go in the stage 3. You can pledge all these securities with Zerodha. Once you place this, you can get, as these are very liquid in nature, you can get around 90% of the funding. So it is only 10% haircut, and 90% of the funds you can continue using for futures and option purposes. The next one is that all these liquid funds generally can give a return about 5 to 6% per annum. So you are basically buying these anyway, earning about 5 to 6% on your funds. The next stage is that with these 90% of the funds provided by on the platform, because you purchase these, you go and buy the futures of the stocks. Just for an example, I have given the stocks of the different sectors, and you can always choose the different stocks available at a good pricing and for the investment purposes. In fact, let me tell you, it is not for the investment purposes, as you will be buying these in the futures and not for the in the cash, where you have to fund the full amounts. So in these futures, basically I have just suggested, like in the pharma sector, you can buy Cipla in around 700, in NBFC buy Bajaj Finance in 3500, banks ICICI Bank is good around 350 to 370, and in IT sector TCS looks good, which you can buy from 2200 to 2300. These are just for an example, and these are the pricing as of currently in the market. So for buying the future, normally the process is that you have to fund around 20% of the value. So suppose we go for TCS, the price is, let us assume 2300, and the lot size is 300. So you have to pay around like 7 lakhs into 20%, which is around 1.4 lakhs. So you, out of this 90%, you can put the margin of 1.4 lakhs for buying one lot of the future. Then once you have done that, then you go for the next stage, wherein you sell out of the money calls, which is basically the monthly series for the stocks. That suppose TCS is, so you TCS right now is 2250, you have purchased the future in 2250, you sell the call of 2300, which right now is the price is around 60, and the lot size is 300. So you are getting a premium of 18,000 in the pocket because you have sold the call, and now this 18,000 and you have funded 1.4 lakhs. So the return per month is about 10 to 13%. It can vary depending on the what strike price of the call you sell and what is the premium price at that point of time. But it can range quite good percentage return every month for selling out of money call for the futures or the shares which you are owning in your system at that point of time. Next one is that as the month ends, as I mentioned, this is for the month. As the month end, like currently everything is going for September, and as the month ends on in the by 27th of September or something, let us assume that either the TCS price, closing price, is below 2300, then whole 18,000 is yours. So you paid 1.4 lakhs and you have got 18,000, which is around 13%. This is your earnings every month, and you can do this for all the stocks and every time. But let us assume that the price goes above 2300. Then in that case, you can sell the future which you had purchased and you can buy it in the cash and you give the delivery. Because remember that you have sold the call, that means you have to give the delivery. You have given that right to the others to buy the shares, so you need to give the delivery. In this process, you will see that you are safe, your funds are safe, you are anyway earning 6% on the funds you invested, those are visible, and against that you got the funds, and you are always selling these calls every month and making good money. I hope this video is useful for you. Thank you very much, and I'll make similar other videos and will share with you. Thank you very much, and bye bye.